I am an associated member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. All trades placed by me are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Here is a position disclosure. Today I'm going to be doing an update on a video I did about SoFi last October. I am currently long SoFi. This is my position disclosure. I am going to be talking about a position that I am currently in. With that said, let's jump over to our chart here. Big day for SoFi. Look at the volume. The highly anticipated news of SoFi getting a bank charter has finally come to place just in the nick of time, because this stock was getting absolutely demolished. So I'll start just with an update of the news and what it means, and then we can backtrack a little bit and we can talk about a technical update to the stock since I last did a video on SoFi back in October. So again, last night, Tuesday night, SoFi announced that they won approval from the Office of Comptroller of the Currency and the Federal Reserve for its plans to become a national bank by acquiring a small community bank that is known as Golden Pacific Bancorp. Promptly this morning, Wedbush initiated SoFi with an outperform and a price target of 20. Probably won't be surprised to see a whole bunch of analysts also come out in the next couple of days and increase their price target or upgrade the stock, but we'll see if that actually happens. So this has been heavily anticipated. When I did my last video, which was in early October, I had chatted about that there was some anticipation that this bank charter could come through as early as November. Well, here we are in mid-January, about 3 months after that, and it finally came together, and the stock is having a really big uptick on it. So what does this mean for SoFi's business? Well, SoFi has really become kind of a diversified fintech company. They've got multiple revenue streams. They've got multiple businesses that they're pursuing. Their original business was student loan lending and student loan lending refinancing. That business has actually been terrible because there's been no business, right? The United States government keeps pushing back the timeline by which students need to start paying off their student debt again. And that obviously, why would you refinance your debt if you're not actually paying it? So that was SoFi's original business, and luckily they were able to diversify away from that over time, because otherwise, this company would be completely shot. But they've got other lines of business as well. They're big into financial services. They are big into, they have this Galileo app, which is an API that a lot of other fintech companies, like Robinhood as an example, that they utilize. That's kind of a business-to-business part of SoFi's business. But so the bank charter affects a couple areas of their business, but specifically lending. Why and how, right? I guess that's the question. What does this mean? Why does having a bank charter affect their ability to lend? You can already get a loan through SoFi, but they haven't been able to originate loans themselves. You have to be a bank to do that. So up until now, every time someone was taking a loan from SoFi, SoFi had to utilize one of their partners to actually originate that loan, and they would then have to pay a fee to that partner. On average, that fee was 3% or 300 basis points. So now that they can have this bank charter, they'll be able to originate those loans themselves. So instead of paying another bank to originate the loan and then coming in and lending it to one of their customers, they could do it themselves. That means that they have a lot more flexibility in their rates in which they could loan, so that can increase overall volume. And it also means that extra 3%, 300 basis points, maybe that comes down a little bit, but they can actually pocket that themselves. So it's potentially huge for their business. In an original investor presentation, SoFi's management cited that a bank charter could yield incremental EBITDA of in excess of $1 billion by 2025, including up to $193 million for 2022 alone. So it just shows you how hugely important that is for SoFi's business. With that said, let's talk a little bit about the price of the stock, because this thing has been brutal these last couple of months. When I first did my SoFi video back in October, I was talking about the technicals, the break higher. This has actually been a stock that I've been trading very consistently since early July. Throughout the entire period of time, I don't think I've ever been flat in the stock. I've always maintained at least some sort of core position in it, but I've gotten heavier, I've gotten lighter over time. Actually, that's not true. There was one time I got fully flat the stock, which was when I hit my profit target of $24 in November. I think I got entirely out of the stock for a short period of time, and then it came back down and I started to build into it. But for the most part, I've been trading this stock very consistently almost every single day. I've been taking stock home almost every night. I even held it through this earnings report, which was a little bit of a nightmare back here in August, but it gave me the opportunity to rebuild off of this base. Again, if you want to learn about the technicals of how I traded it, go watch the original video because there were some fantastic trades in here on the way up. And then when I did my original video in October, I mentioned that I had a profit target on my trade of $24. Well, guess what? The high in November that it got up to is $24.65. So that profit target turned out to be really spot on. You know, the fact that I was able to capture this move here from $14 and had a profit target of 24, and it clipped that almost perfectly. That is a degree of skill perhaps, but it's also a degree of luck. A lot of times when you have a profit target like that, it undershoots it or maybe it really overshoots it, and then you have to manage the position appropriately. But anyway, great trade back in here. Hopefully some of you guys who follow along with the Derrick the Trader YouTube were able to find places to be involved in it and capture this move. And then what happened? Once it hit my profit target of $24, I got entirely flat the position. I was totally out, and then disaster struck. They just destroyed this thing all the way back down to the original prices that I was looking at it in this, $13.50 to $14 support area. And then from there, they even broke that big support here in the beginning of 2022 to bring it to almost an all-time low of $12 yesterday. Yesterday's low is $12.02. Oh my God, so bad. It's almost an all-time low. There was only a brief period of time that SoFi, this was a SPAC, remember, so while it was a SPAC, it was trading around $10 for a while. It de-SPACed into SoFi. There's only been a very brief period of time immediately after the de-SPAC, less than a month, where it actually traded above $12. So by yesterday, almost every single person who's ever invested in SoFi has been out of the money. And we know that markets work in feedback cycles. That's potentially a problem that could bring the thing even lower, and this is why risk management is so important to the business. We had some good trades here off that $14 support level. There was a nice bounce back to $16.35, but then once this ignition candle, we call this an ignition candle, once that low broke and once this support here broke, you really kind of have to get out of the way, at a very minimum lighten up. Again, for myself, I'm constantly ebbing and flowing with my position sizes. I get heavier when it's advantageous for me to get heavier technically. I get lighter. I never got completely out, but I get lighter when the stock is getting potentially a little bit broken, just because, again, risk management. But I've had a strong thesis in SoFi that has kept me in it to some degree throughout this entire period of time. So what caused this massive sell-off? Well, this massive sell-off was part of the destruction of growth stocks to begin with. If you look at almost any growth stocks, we can look at ARK. Cathie Wood's ETF here seems to be almost the perfect ETF to look at if you want to get an idea of how growth stocks in general have been performing. And you can see here it's just been an absolute destruction. Since November, which is when SoFi topped out, ARK came from $125 or so down to $76 or so today. So this has just been completely destroyed. I've spoken about it in a lot of other videos. A whole ton of growth companies that are out there off their 52-week highs, they're down 85%, 80%, 70%, etc. Now the thing about SoFi that's really interesting is in a higher interest rate environment, which it's been the threat of higher interest rates that has destroyed growth stocks because it's brought down their multiples. In the threat of higher interest rates, it's good for SoFi and potentially bad for SoFi at the same time. So what we've seen is recently, as these growth stocks have gotten destroyed, especially over the last couple of months, Certain sectors like financials, well, the last couple of days the financial sector's gotten hit a little bit just because they've reported some earnings reports that weren't fantastic. But for the most part, more of these value type sectors, financials, consumer staples, energy, things where there's actual cash flow have been performing. And the banks in particular stand to benefit from higher interest rates because this is how they make money. They make money when interest rates are higher. They make money off the spread between shorter term interest rates and longer term interest rates. So when interest rates move up, it gives them more flexibility to be able to borrow money at lower rates and then give that money back out at higher rates. And again, this is what the new bank charter is enabling SoFi to do. Up until now, SoFi has never been able to take money from a depositor and then re-lend that money out to someone who wants to borrow it. They haven't been able to do that because they haven't been a bank. And that's why they've been having to pay banks to act as their loan originators and pay them 300 basis points on average to be able to do that, which obviously negatively impacts their business. So, higher interest rates, good for banks. Going back to SoFi here, it's interesting because on the one hand, it's a high multiple growth tech company. Those stocks have been getting destroyed. On the other hand, it's now officially about to be a bank. It's been a bank-like company for a while. And in theory, higher interest rates should actually be good for it. So we see, though, that the multiple compression has negatively impacted the stock by more than any benefit that could come from bank-like loaning facility arrangements and their different businesses. So this news comes out today. Stock's up about 18%. We now understand the implications to the business of what that news actually means. Can you now come in and buy? The answer is kind of maybe. If this happened in late December, and maybe the stock was trading at 16 bucks, bank charter news comes out, and the thing gaps up to 18% or so, it gaps up to 1850, something like that, which you can see as a prior resistance level. I actually would have been a big advocate of selling into that. Why? Buy the rumor, sell the news. It's a very common saying in trading, and it's a common saying in trading for a reason. If everyone expects that something is going to happen, and then that happens, well, there's no one left to buy. Because everyone who thought that this was good information and wanted to be involved in stock because they thought that this is going to happen, they had this expectation that this event was going to happen, they're already in it. So they're already in it, so they're not going to come in and buy after the fact. That's why whenever you're looking at trading in general, especially, we've seen this recently with some of the Fed stuff, surprises are always key to really big movements in the market. When something totally unexpected happens and everybody has to adjust their risk models, that is when you've got oftentimes the biggest moves that come. But when everybody expects something to happen and then it happens, not only is there no one left to buy it, but people are going to say, okay, great, this is what I was waiting for. Now I'm out, I'm going to book my profit. So if this stock was back in the $16 area and it gapped up on this news to $18.50, I'd be saying, all right, we should probably be looking to sell this news because sure, it's great for the company, but everyone knew it was going to happen. If you look at any, financial blogs or whatever, Twitter, this is all anyone's been talking about with SoFi for a while. When's the bank charter? When's the bank charter? When's the bank charter actually going to happen? And then finally the bank charter news happens. It easily could be a sell the news event. The reason why I think that this might be different is because of where the stock is coming from technically. These levels broke. This 14 to 1350 support level broke. Then we broke even further. We closed at lows. Super oversold, by the way. But we closed at lows near $12 yesterday. Most active traders, active investors are not going to be holding through this. They're getting stopped out. So what that means is actually now when this news occurred, there's a much better probability of the stock keeping a sustained bid, at least in the short term, from that news. Because those same people who would have bought the rumor and then sold the event, well, they probably already sold because they were forced to because of how badly the stock has been performing. So you've got less people actually involved in the name because of the stock's performance. So that means that there's more potential buyers who can come in to buy the stock, and also less sellers. See, this is really important, I think, as a broad lesson for anybody who's a trader or a market participant. It's about understanding the positioning of the people who are already in the stock or who are already in the market to have an understanding of what's most likely going to occur next. And that, by the way, is the real true root of technical analysis. Technical analysis is not as simple as just memorizing chart patterns. Obviously that's important, understanding volume, things like that, really important. But at the end of the day, what you're really trying to do as an active trader is ask yourself, based on this new movement in the marketplace, who does it put into the money, who does it put out of the money? Are people, because of this stock movement, more likely to sell and book profit, or are they more likely to buy, or shorts more likely to get squeezed, or whatever it is? Well, this type of event now, because of where the stock is coming from, is actually more likely to lead to buying because people are already out of this thing, and I think it's got an 8% short interest coming into today. So this also could be a catalyst for those shorts to get squeezed. So right now, it is the day after the event. So it's Thursday, I think. The news was announced last night, and it's an interesting looking candle here so far with the technicals. They sold SoFi off, they gapped it up really big, they put in a pivot low as the ADMA was catching up. I was cheerleading to my team to come in and do some buying off these lows when the ADMA caught up, and now it's kind of working its way, it's grinding back up, and if the stock can close like this or better, I would like honestly a little bit better of a close. If we could get a 1450 or better close today, which I know is asking for a lot, there's 30 minutes left till the closing bell. That's a fantastic looking potential candle here. You can see the last pivot high is 1442, and that's in conjunction with this 21 EMA, which is what I consider to be the upper band of technical equilibrium for the stock, which is at 1433. If we can get a close above the 21 EMA, above the last pivot high here, then technically this thing is looking really good for continuation. This becomes a high volume hammer type setup, not exactly at the bottom, and it's not a continuation hammer either. It's a little bit unique because it's a news event, but it potentially sets us up to maybe reverse this short time frame downtrend that it's been involved in. So I've been trading it really actively today. I initially sold some stock, I rebought some stock, I sold some stock again on kind of the way up. But I am maintaining now my initial target that I had on the stock of $24. So once again, I'm looking to see if I can do it again. I caught that move last time from $14 to $24. It's where I got flat, and now here we are at around $14. I'm curious to see if this can become the catalyst that actually leads the stock to break higher. As of right now, I think that if we close like this, if we close with this tail, you could utilize today's low as stop loss. It really shouldn't be able to break today's low if the idea is going to be correct. With that said, it's a market environment right now that's been punishing growth stocks. So that is also potentially going to weigh on this. But maybe, just maybe, the punishment on growth stocks is starting to get priced in. Everyone knows these interest rates are coming in now. You should definitely check out the ProDesk virtual trading floor that I'm running. There's some links in the description there where you can learn about how you can get involved. And there's also a link to my free ebook where you can learn about becoming a professional trader at T3 Trading Group like I am. See you next time.